Whenever you turn on the news, you always hear terms such as the Dow or stocks. Maybe you have heard your parents talk about their investments and have no clue what they are talking about. Well, it all starts with the stock market. The stock market is the place where stock is bought and sold. So what is stock? Stock basically means part of a company. So when you buy stock, you buy part of the company. When you buy stock, you buy it based on shares. Each share is worth a certain amount of money depending on the company. This can range from a small percentage of stock, where you just make a small amount based on how well the company does, to owning a large portion of the stock and in some cases getting extra perks such as having a say in how the business is run. But to do this, you would need to be buying millions of dollars worth of stock like someone such as Warren Buffett. So you know what stock is, but the question is, why? Why buy stock? And the answer to that is simple: to make money. When you invest in a company, if your company does well and grows, so does your stock. So if you buy stock today at $10 per share and the stock goes up, your $10 may turn into $20 or even $50. You can also buy more than one share. So if you want to buy 10 shares that are worth $10 each, you would pay $100 total. Every time that stock goes up, each share goes up with it. So if making money is that easy, why doesn't everybody do it? Because investing in companies is a huge risk. If the stock goes down, so does your investment. So your $10 can become $5, $1, or even 10 cents or less. So it is always important to know what you are investing in. Not all companies are available for investment. Many companies remain private, while others will open their companies for the public to invest in. When a company first opens itself for investment, like what Facebook did in 2012, this is known as an initial public offering, or IPO. Why do companies have an IPO at all? This is a way for the company to make money. People are putting their money into the company and the company will use this money for various things. Ultimately, the goal is to make the company grow. Sometimes a company will offer some perks to its investors by offering a dividend, which is basically a bonus for owning stock. This is a way to say thank you to its investors, but not all companies will do this because it is essentially giving money away. There are multiple kinds of stock markets, including the New York Stock Exchange, located on Wall Street, and the NASDAQ, located in Times Square, both in New York City. These markets are measured by the Dow Jones Industrial Average, which takes the 30 major companies and measures the overall growth of the stock market. Due to the Great Depression, laws were set up to protect investors and regulate the stock market to ensure another stock market crash does not take place like it did in 1929. The leading regulator of the stock market is the Securities and Exchange Commission. The SEC has a three-part mission: to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. If you are interested in investing, begin by looking at the stock market, which can be found online or in the newspaper. This will give you all the information you need to know about how much each share is worth and whether it has gone up or down recently.